Homebuyer power was markedly diminished when mortgage rates increased from about 3% earlier this year to almost 7% now. As a result, inflation adjusted mortgage payment on the same home is now almost 50% higher than was earlier this year. Another way to illustrate the loss of purchase power for a household is to think about how much a household with a $100,000 income can afford. At 4%, that household can afford a home priced at about $466,000. Now, at 7%, the same household can only afford home priced at about $385,000. That's almost a 20% decline in purchase power for that household. And this is naturally why we are seeing some price declines in housing markets at the moment. There are a number of challenges in the housing market today, and one important consideration is how expensive has housing market become. But let me focus on a few other ones that drive that lack of affordability. One, for example, is the strong lock-in effect. Because of record low mortgage rates over the last couple of years, 95% of households with a mortgage have a mortgage rate that is below 5%. Also, they have likely bought a home when home prices were considerably lower. As a result, these households have very little incentive to sell their home and purchase a new one. Which brings me to the second challenge, which is inventory. Fewer sellers of existing homes means continued lack of available homes for sale and thus less turnover and velocity in the housing market, which brings me to the critical challenge being affordability. Lack of affordability will prevent many young households and those with limited incomes from being able to buy a home, to accumulate a home equity, which is for many Americans the only source of wealth and financial security. Housing market is likely to see some challenging times ahead, particularly in light of much higher mortgage rates, which are expected to level off higher than many forecasted. As a result, the number of home sales in the coming 2 years will decline from 2021 peak, but is still expected to remain at 2015 to 2016 levels. Home price deceleration will continue to pull price growth closer to long-run average. In some markets, particularly those that have seen more rapid rate of home price appreciation during the pandemic, home prices will decline to align better with incomes of local residents. Nationally, however, we are not likely to see notable declines in prices on an annual basis, but real prices in 2023 may fall some. Lastly, however, challenging market conditions will bring about more innovation in construction and housing finance, which may open up more opportunities for better affordability ahead.